I'm trying to keep these videos more and more frequent, so thank you so much. I didn't notice from my analytics people are being able to follow this template quite well. So thank you very much. Do give me your suggestions. It helps me and keeps me motivated to make more and more videos. So let's dive into the flat market situation. We're not seeing much growth in the market indices. We're seeing a lot of pullback. If you go back to the interest rate videos that I had created and the effects of the interest rates, like that does tell you that the interest rates are super high, so the cost of borrowing has gone up, and that's why money is being sort of held. The investor confidence is sort of, let me just save my money, let me just take those measured decisions. And why I am making this video and what I want to convey through this video is that what we can do in a measured way in this flat market. Because it's not necessary to always keep deploying your money, always keep churning. It's important to take measured decisions. That's very important for us to grow our own portfolios and our own personal finances. All right, so let's see what's happening exactly. So we have this higher cost of borrowing, and just look at what's been happening. Like early 2002, closer to the dot-com bust, and then like 2006, 7, 8, closer to the economic crisis, like the recession which hit most of the world. You can see that the rates were higher and higher back then. So this time we're seeing those high rates in the economy, but obviously, like in terms of like that whole flash crash and whatever happened, like while people have been saying, okay, we're expecting it, we might see it come. Uh, Also, we must take into account that technology has evolved over that time, and trading systems have evolved. The stopgap measures have evolved. Sorry, and the way people are backstopping these things have like evolved to a larger degree. That's why what we are also seeing is that we've not seen like that big crash in the market where there's a V-shaped recovery. We just saw that during COVID. So I think a lot of what's also happening is the Fed and this high cost of borrowing, people are trying to target a soft landing. So I think that's important to understand, that we are probably not going to see, like, the probability is very low for like a very sharp decline, but we might just see like just prolonged slowdown, and which is what we have been seeing. So it's important not to get impatient. Like, the main thing what happens here is people tend to get impatient, people tend to not understand the things going on in the economy. So we need to just understand and take that measured approach. Now, what's happening because of the high cost of borrowing? Like, money is being moved more and more into like fixed income, sort of like those government securities, bonds, those type of instruments, where people are saying, okay, I want my money to be safe. I want my money to go into borrowing, which is safer, and I don't want to invest that much into equity. So that creates that prolonged period of slowdown in the market. We don't see that big rally we saw in 2020 and 2021 when everyone was trying to get a piece of the action and pump their money in. So I think when you're seeing like bigger institutions do this, it's important to just take that measured approach and not try and do anything too fancy or out of the ordinary here, because we are in a period of slowdown. There is focus more on profitability, there's focus more on survival. So let's just follow that and ride out this sort of a situation. And we're seeing layoffs and slowdown in the economy just being a general effect, and people are also waiting for the absorption of the effects of AI. So we're in that slow time, so it's important to understand that. We also see the higher rates went into effect, like the last Fed meeting since I had my interest rates video. So end of July, we did see another rise in the interest rate, and which has further sort of slowed things down a little bit, and there's a lot more measured approach being taken. And also we're seeing like a bunch of layoffs happening in like the bigger companies, which is kind of to be expected. So nothing much new happening, but it's just important to know that, okay, this is going to be a prolonged period of slowdown. So have our expectations measured and plan accordingly for those situations. So that's very, very important to understand. Okay, so what's also important is to follow like the flow of money. When you can see private equity is going into the middle market and lower market, the cost of borrowing has increased, and profitability and survival is the focus. So follow that strategy. Just know that we're not going to see those big returns. We're not going to see something crazy happening unless it's in select sectors or select stocks. We're not going to see something crazy happening. So just keep our expectations the same. Like, water down your own expectations and know that, okay, this is the situation and this is what I can do. And for our own money, like we already talked about this, like you just have that measured strategy. keep the focus on the longer term. See what's going to happen in the future, because these high interest rates aren't obviously going to carry on forever. You saw very low interest rates from that chart over the last 10 to 15 years. So you know that this is like an economic cycle which has happened, which is sort of, playing the slowdown effect. There's also like these hot sectors such as AI, climate tech, ESG, which are seeing like a lot of traction in various parts of the world. So when we know that we are going to see traction in these particular spaces, these spaces are hot, some spaces are not hot. We know technology is primed to do well, but it's just this environment which is making it difficult for everyone. So just, you know, in this situation, what can you do? You can save your money, you can measure and water down your approach and be like, okay, I will get into the game a little bit later. For now, I can just plan what I see in the future. That's a big part of the investing process and people's investing thesis. Have a very consistent thesis, know what your goals are, know why you're investing, and know how the economic cycles are affecting it. That is the key to understand, because a lot of people don't understand this, get impatient, rely on other people for advice, and then what happens is you're sort of in that situation where just relying on other people to help you out who probably don't know any better themselves, and that just causes bad things to happen. It causes people to like lose money, it causes people's portfolios not to grow. So it's important that you educate yourself and see that, okay, what can I do for my money, which are the sectors which I feel are going to grow, what is the research I can put into it. And these prolonged periods of slowdown are a chance to research these particular things. It's not somewhere where I should get impatient and try something fancy or out of the ordinary. I should just put my head down, research, and be prepared for when the great times are going to come. So I think that's something which we can learn and we can do for our own money. Also, yeah, this is something like very interesting which just came up, I think, a day or two ago. Obviously, the most important disclaimer is this is not investment advice. I am not a lawyer. I don't know any better myself. And also, like, I'm not a certified financial planner, so please don't take this as investment advice. But what has just come to light is Michael Berry, the guy from The Big Short. I think most people know that reference. If you don't, like, just Google The Big Short movie, and who Michael Burry is. But he made a lot of money during America's housing crisis. So there's bearish options against the S&P and the Nasdaq 100. Again, I'm reiterating, it's not investment advice, but he is a very influential figure, and he's someone who's put in a lot of research and probably knows what he's doing. So if he is expecting the market to go down and benefiting off of these instruments, it's a possible sign of things to come. Again, this is not investment advice, so please do not act on whatever I'm going to say. I'm not a lawyer, I'm saying it out again. But this is a possible sign of things to come. Like, we can see like this prolonged slowdown, the people are more bearish on the economy. So just keep that view in mind, that if you're making fresh investments or you're looking, please consult someone who's a professional, and also look at what can do well and having your investment thesis. But this clearly is one indicator that probably people that are big in the game and people that have had this vision on the economy, they don't think that in the short run the economy is going to do wonders or like proceed in a very quick way. So I think that perspective is very important to have. Yeah, and one more thing which is important to reiterate, if you just look at how money has been made, like stuff like alcohol, cigarettes, iron and steel, these sort of sectors or businesses which have been timeless and given shareholders lots and lots of returns over 20, 30-year periods, we go back to this concept of boring finance, like finance which is more on like spreadsheets, which is more brick and mortar. So these sort of industries which have grown and scaled and stood the test of time, obviously technology has disrupted a lot of things. We've seen new innovations, we've seen like cryptocurrency, there's new industries coming on. But like the larger corporations where the finance is more boring, it's more like risk averse and proceeding in a very measured way where your bets are hedged, that's often yielded the strongest returns. So it's important for us to understand that, and important for us to incorporate this in our investment thesis. Now, who said that? I don't know. That's why I've put unknown in the video. But if you do find someone who said that, send it to me and I will edit this video. And with that, yeah, I know it was pretty generic. We didn't cover too many specifics, but the important point to realize from this is that this slowdown is going to stay on for a while, and there's nothing much we can do. Like, people, there are layoffs, there are very measured approaches. So it's important to sit and plan and have that reflection moment. I think that's very important right now in this economy. And I just thank all of you for helping me. I noticed my last few videos have done pretty well, and like my analytics tell me that I'm receiving more and more views and more reach. So please do like and subscribe, and please do give me your feedback in the comments. This helps me be motivated and helps me create more and more videos, and anything specific you want me to like cover or recap, do put it down and I'll try my best to do that. All right, thank you, and I'll see you in the next video.